We take a really fundamental, granular look at how climate impacts those businesses, the commercial value drivers of those businesses, and that impacts how we lend to them going forward.
So, warmly welcome to a new episode of Move the Money Into You series. My name is Ingmar Ensog. I'm founder and CEO of We Don't Have Time. And I'm very happy to announce that the very first episode we did in this series, where we invite different stakeholders in finance around the Move the Money topic. We have the money, but it's still very much invested in fossil fuel instead of the solutions. So we have invited everything from pension asset managers to banks to policymakers and scientists to talk about these topics. And we're not only inviting those that are doing everything right, we're also inviting them that are still needs to move the money a little bit faster to the solutions. So I'm very happy to announce that the very first episode we did with the Swedish pension asset manager AP7 fund, the state-controlled pension fund where half of the Swedish citizens, we had a discussion about them, about is it the time for them to move the money from oil investment into the solutions. They are still heavily invested in fossil fuel. And one of their kind of most controversial fossil fuel investment at that time were actually in Saudi Aramco Oil, a state-controlled oil company in Saudi Arabia that were very much resisting the COP28 agreement and a lot of things. So we had a conversation with them about, is it possible to be an active owner? Is it really a good strategy for that kind of company? Is it better that we move the money away from them? And I'm very happy to announce that last week, the AP7 announced that they are now divesting from Saudi Aramco Oil and also some other oil companies. I'm very happy to see that we are not just having a dialogue here. Dialogue are actually triggering also action. Of course, it was not only because of our dialogue, but it was a good move from AP7 and shows that we need to listen to each other and talk about the facts. And when we do that, people change in a better direction. But this time, we have a new guest, and it's a very interesting guest. It's a UK bank, also quite recently entering the US market. And they are not investing in fossil fuel at all, if I understand it correctly. And they're also very entrepreneurial. So they are working closely with the entrepreneurs, helping them to grow the business, grow the solution. Because most companies, most startups today, they are very much about solving the climate crisis and the problems we have. So having a bank that are helping them is really what Move the Money is all about, moving it from the problem into the solutions and helping the solutions. So I'm very happy to present Matt Bullivant, the Director of Sustainability and ESG Strategy of OakNorth. Welcome to this show, Matt.
Thank you, Ingmar. Thank you. Great to be here.
And I will let you start. Can please tell the audience about who you are and the bank you're working for. What is making you different?
Yeah, so I'm our head of sustainability at OakNorth, and I've led sustainability in smaller to mid-sized banking organisations in the UK for almost a decade now. OakNorth are a relatively new player in the market, so we're 9 years old. We launched in 2015, so not everybody has heard of us yet, but we are a very, as you say, entrepreneurial-led business. We're still led by our co-founders, and we are a commercial lender, and we are a lender to what we deem as growth businesses. So SMEs that have reached a certain size that traditionally have been quite poorly served by larger mainstream lenders. And this was an experience our co-founders, Rishi and Joel, had when they founded their first business in the early 2000s, Copal Partners, which they ended up selling to Moody's. When they were scaling that business, they found it very difficult to access finance. So this was a personal experience of them to say, well, hey, actually, let's try and set up a bank that serves those entrepreneurs, those growing business leaders who desperately need to access finance. And the reason they get underserved is because, generally speaking, the business model is either too new, so they don't have 10 years worth of credit history, or it's too complicated for the bigger banks to think it's worth their while putting the time and effort in to do a fundamental analysis of that business to lend to them. So you either have to be prepared to sit and wait for 6 months through credit committees, or frankly, the mainstream lenders just say no. So that was the specific market which our co-founders refer to as the missing middle that we aim to lend. So we lend to that sort of mid-segment of growing businesses who need access to commercial lending services. The way we go about doing that is we have our own proprietary software, our credit intelligence suite, which takes a forward-looking view towards creditworthiness and credit assessing businesses rather than a backward-looking view. And that does that at a very granular level. So we go down to sub-sector granularity in terms of what the forward-looking levers might be that affect the financial performance, the likely capital expenditure, the creditworthiness of those businesses. And we actually license that software to other banks, primarily in the US, to help them with their own commercial lending in assessing SMEs and smaller growth businesses in their lending activity. The side of things that's very kind of strong for us on the climate side is quite a number of years ago, we actually recognized that taking that forward-looking view of what levers might impact a business and where there is perhaps no track record, no history of how this might impact them, has really strong parallels with how you integrate and think about climate risk and how actually climate will impact businesses and the commercial side of business activity. So one of the strongest areas of our own credit intelligence software has been to adapt that to look at climate risk. And that is now something that we integrate through all of the business we do. We take a really fundamental, granular look at how climate impacts those businesses, the commercial value drivers of those businesses, and that impacts how we lend to them going forward. So that's our basis to start with in terms of how we integrate all this.
So when I went to your website, it was not so much about sustainability there. You need to kind of dig quite deep to find information. It was very good information when I found it. So if I understand it correctly, the reason why your bank are focusing on doing the sustainability and focus on climate, is that mainly in order to actually have a lower credit risk from your clients, or is it for promote and attract the clients? What's the main reason why you, or is it that your founders wants to save the world and they see more of duty to do it? What's the main reason why you're focusing on sustainability and climate?
So there's a collection of things there, all of which come into the mix. I think I will give you a philosophical perspective here in terms of how I think about it, how we think about it. If you look at the banking market, it tends to get a little bit polarized, where you have a very small number, unfortunately a small number, but a small number of green banks, those who specifically invest or finance solely green projects, initiatives, businesses, and try and drive that agenda forward. Then you've got the mainstream banks who might have a sustainable or a climate-centric product, which is a very discrete product set, and then everything else they do. From our point of view, we actually want to be integrating climate considerations into every piece of business we do. And that doesn't necessarily make us one of those green banks. It just makes us, as far as we're concerned, a well-run bank. Because if you're not thinking about that in terms of this being a fundamental consideration in terms of the longevity of the businesses that you're financing, in terms of their prospects, and the fact that this is clearly going to be a huge impact on macroeconomic factors in terms of the economy going forward. If we want to think about our business being here in 2030, 2040, 2050 and beyond, then you have to be thinking about climate in terms of everything that you're doing. And that's purely good sense, regardless of the intention. And I think to your last point there, this is something that our CEO is particularly passionate about. He knows that we actually have a responsibility as a business who are a young bank. We're not encumbered with legacy, dirty fossil books or anything like that. And being part of that neobank, tech-driven crowd, we've got the agility, the capability, the analytics to be able to make a difference and to be able to actually have really quite meaningful conversations with our customers and clients around climate to help them on that journey as well. And to your point there is almost a duty for us to do that, both from the climate point of view, but actually also from a fiduciary duty as a financing partner to those customers and clients. So that's kind of how it feeds into philosophy.
How has this changed since you started, or was this in the DNA when the bank was founded 9 years ago?
So I think the bits that were always in the DNA were around the fact that actually we are here to help those growing businesses plan for the future and grow and expand their prospects. So talking to them about the fundamentals of what will impact their business has been there from the outset. And recognition that climate is part of that story has evolved as the climate space has kind of grown on the agenda and is clearly, a very apparent feature as far as we're concerned in those businesses' prospects going forward. Things that have moved forward along the way. So when I joined the company 3 years ago, one of the first things that we did was set out our net zero target for everything we do, including everything we finance. And in consultation with the senior leadership here, we decided that this was just too important to leave out at 2050 like everybody else. So we set 2035 as our net zero target for everything, including everything we finance. And that's a really punchy kind of target for a banking institution to set out. But it's that line in the sand of here's an indication of how seriously we take this and what we are trying to achieve in terms of our ambition on climate.
And is that, how hard is it to live up to after you have changed this and have your own target? Do you need to say no to business, or is it the opposite, that you attract business more by having those bold targets?
Yeah, so it's hard, and I think everybody recognizes that the transition is challenging. That's a given, I think, regardless of whether you've set 2035, 2050, or where you are on your journey with this. I think it's worth remembering that we are dealing with smaller, younger growth businesses and SMEs. They are quite early on in their journey and understanding with this, so they need assistance with this. If I just went in there and said, where's your net zero target, else I'm not doing business with you, well, that wouldn't be very sensible in terms of us actually having a business model with those companies. We need to be engaged and we need to be helping them on that journey. And the conversation is more around, have you thought about how climate is likely to impact your business and how we can support you as a finance provider in adapting or enhancing your business model or changing things that will help you align with that, as well as bringing in additional kind of support and guidance and third-party input in to help them with that journey. And does that mean that our customers suddenly decarbonize or have a net zero target? Not right now, but it moves them in the right direction. I think there's the other side as well in terms of us actually getting to grips with our own scale of impact. A lot of the work that happened early on after setting that target was actually us baselining. So I'll give you an example there. We finance an awful lot in the built environment. And for us, in terms of actually effectively measuring our scope 3, in terms of our financed activity, we've had to go quite a long way above and beyond in recognizing things like embodied carbon in construction. Because when I started out on this journey here 3 years ago, there was no methodology to follow in terms of recognizing embodied carbon. So we thought, well, hey, this is really material for us because of what we do. We need to go out there. We need to work with the standard setters like PCAF and help develop that methodology so that we can actually build that into our target setting and know where the scale of impact is. So we're at that sort of tipping point in our journey, and we put out a detailed TCFD report last summer, certainly for a bank of our size and maturity, to have that there that basically sets out strategically how we think about this from a risk point of view, but also commercial strategy aspect, the areas that are most material for us, and the sort of journey that we are trying to help our customers go on to get them aligning with that net zero.
How big is your bank? How many clients do you have, and how big are you today?
Yeah, so our balance sheet is 5 billion now. So we've lent 10 billion to date, north of now, since we started, which has been a really good growth story, given that we're only 9 years old. So we've kind of gone on a really good kind of growth story. We do lend to larger SMEs a lot of the time. So for us, the number of clients we deal with is in the high hundreds, low thousands. So that means that it's a good number to be able to get our arms around. It's a very different challenge to the large incumbents who are dealing with tens of thousands of customers, and they have a very different sort of challenge in terms of that engagement and dialogue.
Yeah.
We are a combination of being tech-driven and tech-backed in terms of the data and the analytics and the tools that we can give our relationship managers, but our customer relationship is still very much individual, personal, and there is that dialogue there that we are essentially enabling our frontline relationship managers to have these conversations with customers and clients, as well as our own risk capability in terms of thinking around creditworthiness and credit risk appetites and that side of things in terms of policy.
I see. How hard is it for you to attract a new client? Are they swapping bank and kick the old bank out in order to start using your bank, or are you already from the beginning when they're very small and you grow together with the clients? How is your customer acquisition journey for you? The most common.
It's a combination. Yeah, it is a combination. We do get a lot of repeat business. Our customers like to stick with us. They get a good service. They know that they can kind of rely on us as a business partner. A lot of our customers have been with us through COVID. We never stopped financing through COVID because we had such confidence in our own sort of forward-looking credit assessment that we were able to adapt quite quickly during that period. So we've got a lot of goodwill amongst our customer base in terms of actually retaining those pre-existing customer relationships. We do bring in new customers, of course, and as we grow, as our kind of awareness grows, that brings in customers in that sense. It's still very much an underserved market in terms of that missing middle that we go after. I think you mentioned earlier, we've just recently started to go out into the US as well, which is an enormous market for us to kind of go after. One that we are familiar with from working with other banks in the US on the credit software side of things. So we understand the banking market there, and actually where you had banks doing, I guess, similar sort of things, or at least in similar areas of the market, the likes of Silicon Valley Bank, for example, who ceased to exist, there is a good opportunity for us now to kind of step in and fill that void. So there is opportunism there in terms of new addressable market for us to go out with. What we're doing now is starting to bake that sustainable narrative into our outreach. So a lot of what I try and do to drive the agenda from the sustainability point of view is not just advocacy, but providing useful information, resources, tools. Part of the strength of the banking sector is to be able to utilize its convening power, to be able to say, you know what, we know another customer who's been through this and has managed to do this effectively and make this commercially viable. Here's how they did it. Here are the partners that they used. You know, if you're struggling right now as a developer in the UK with biodiversity, here's an ecologist that we're going to talk about the requirements on you over the next hour or so. And if you want to hear more, we can put you in touch. Those sort of things that actually start to kind of broaden our remit as a finance provider. We're not just providing cash here, we're providing the support network and the advocacy and the relationships that help move the agenda. And that in itself is business development generative.
And do you see, are you getting many requests from your clients that they need this help today, or is more like you suggest to them proactively?
It requires proactivity from us to a large extent. I think we are getting requests, but it's certainly not the majority. And I think that's largely because we are serving an SME group who have an awful lot of competing priorities. And they
not so much time.
It's time, it's do they really want to kind of engage with something that they know is probably going to be difficult and quite resource intensive. So there is an onus on us to kind of raise it. And actually, as far as I'm concerned, as a long-standing banker in financial services, we have a fiduciary duty to talk to our customers about something that will have a fundamental impact upon their business model and viability going forward, even if they haven't had the opportunity to look at it. And it's not that they don't care. Most of the time, it's simply that they haven't got around to it, or they haven't necessarily got to grips with how it might impact them. And that's where I think from an OakNorth point of view, the fact that we have this credit intelligence capability in terms of looking at a really granular level of what are the forward-looking levers under different climate scenarios, for example, that may impact a business of your size in your particular sector, in your particular geography, well, we are able to have that conversation with them in a slightly more tailored, meaningful fashion than here's the whole sustainability concept that you need to grips with from scratch, which is kind of how a lot of SMEs just don't know where to start with this.
I see. I have a tricky question to you. You mentioned Silicon Valley Bank and that you see that you can kind of take some market share when they are not in the business anymore. There's been a lot of debate around ESG investments, especially in the United States. And one of the arguments, I don't know if it's fair, but it's still one of the arguments that have been discussed out there, is that Silicon Valley Bank, they had a lot of ESG work into their process of who they lend money to, etc. Instead of looking at the balance sheet and the financial risk, they kind of looked at the image. And if you're a United States citizen that vote on the Republicans, they looked at the wokenism, if I put it in that way. Is it any, I mean, that criticism, you probably heard this debate. How do you see that? Is it just unfair, the climate denialist propaganda against the environment, or was it something that was, was it something truth to it? How do you see this?
So I think we almost have to take from a finance provider's point of view, I can almost take a step back and go back to where we started the conversation around the fundamentals of risk. And what I would say is that businesses are now very much alert to this. They're very much kind of engaged with the subject matter. They're very much thinking about it in terms of what it means for their business and where they need to adapt. It kind of really doesn't matter what the financial sector calls it, or whether they decide that they want to direct funds towards ESG or sustainability, or from an individual business point of view, if you are a property owner on the coast of Florida and you're worried about flooding, it doesn't matter whether the ESG is political or not. It's still a fundamental consideration, and it's a fundamental consideration for any finance provider who might be funding that asset. That doesn't mean that you have to be kind of pursuing the climate agenda. It doesn't mean that you have to be kind of championing climate change to just fundamentally think, well, hey, this is an important consideration. So I think when we look at the US market, I think, yes, there are a lot of financial organizations out there that are now having to think, well, we may not want to lead on ESG for the sake of ESG because of the political environment, but that doesn't mean that we should stop thinking about it. And I think actually a lot of banks are still thinking about it. It's just the kind of public positioning of it has become quite politicized and therefore is not a constructive place to go. But I think the response to that is not to just abandon it. It is to actually think about the fundamentals. And I think that's why actually sometimes detaching sustainable agendas from commercial realities can create not necessarily conflict, but it means that you don't necessarily think about things in the right way. Do I think as a finance provider we have a duty to change behaviors and change kind of society's attitude towards things? I don't know. I think bigger banks control so much that maybe that kind of gets directed that way. Smaller banks, I'm not so sure. But do we have a duty to make sure that cash flows to the area of greatest need? Yes, we absolutely have that responsibility. And is there a need for investment in decarbonisation and adaptation and all of the elements that kind of come part and parcel with the climate agenda or other sustainable themes, frankly, for that matter? Yeah, there is an absolute need for huge amounts of cash to go that way. And it is our duty to make sure that those obstacles and blockers are removed. And I think this is one of the criticisms I would have perhaps of the banking industry in the past is that we've almost looked at it and said, well, there might be policy problems or customers aren't necessarily interested, or there might be kind of regulatory problems that get in the way of doing all of this, so we can't do it. And that's the end of it. Well, that's not going to fly. That's just not the way that we should be looking at it. We need to get out of the idea that we are just simply transactionally presenting money to those who ask for it. We need to be stepping out of that to say, hey, we've got this influencing power, we've got this convening power. We need to be removing obstacles to get the flow of capital where it needs to go. And that is a responsibility to us from a fiduciary point of view, not from an ESG perspective. And I think, a lot of what's happening in the US, yes, you can kind of get wrapped into the kind of politicization. As far as I'm concerned, there is a need for cash to go there. That business requires it. I don't really care what you call it. And I don't want to kind of get into the kind of combative, actually this is going to be labeled as this or not. Step away from all of that for a minute. Are we addressing risk? Are we satisfying business requirements for growth and adaptation? That factors in.
Basically, what you do, how you see it is that financial risk and environmental risk, they are linked together.
Can't pull them apart. Yeah.
And I totally agree with you. But that's not how the banking industry see it. In the big banks, etc., they are kind of trying to make money from things that are destroying the planet still, and at the same time make money on green funds that they are also selling. How is that? Yeah. Why is not more seeing this risk? I mean, just one example. We have a lot of countries, including yours country, that are expanding fossil fuel, and US also. And most oil countries are doing this. They are, lending more money, financing, even giving subsidies to extract more oil. So quite recently there was a study saying that end of this decade, in just like 5 years, we're going to see a surplus of oil. It's going to be, we're going to have more oil than we have need for. And that will create big financial problem and distress and be very stressful for those that have invested in fossil fuel companies. It seems so stupid to drill for more oil in a climate crisis when we don't even need it 5 years from now. I mean, that seems to be a bad investment. Why is this still happening? Why is so many financial players playing a part of it? Seems so short-sighted. But because, big banks are lending to this new infrastructure project, and they have a duration of maybe 10, 20 years. How is that? Why is not everyone thinking like you?
I think so. I think there's a collection of problems here. I think there's a degree of confidence lacking in the bigger banking market that actually more sustainable businesses and industries are bankable. I think we are not talking about restricting your addressable market. We're just talking about changing it to a different addressable market in terms of financing. And I think, unfortunately, that awareness, that belief isn't there yet. I think there's another problem in terms of short-termism, and I think you alluded to it there, that actually there is money to be made in the short term, and that it's just a natural draw to doing that and to funding that, rather than thinking out longer term. And I think a lot of the sort of regulation, I mentioned TCFD earlier, and so on and so forth, is trying to get a slightly longer term view. But it is a challenge to do it. And I heard recently an anecdote of somebody said to me, "You never make who's going to make a 2040 or a 2050 profit forecast? Nobody's going to do that.
No.
But you might make a
3 to 5 year
profit forecast, and you still expect your bank to exist in 2040 and 2050.
Yeah.
So why aren't you doing the same thing about climate? Why aren't you thinking, I want to exist in 2040, 2050?
Yeah, so I agree. But many kind of, 2040 is so long time frame. So most of the executives will be long gone they will do something else. They will not work anymore. They go to pension. But 2040, we're talking about a surplus of oil supply in 5 years from now. Those banks and those executives will be in power. Why don't they see this? Are they just stupid, or why?
No,
or are they just caring about this quarter profit?
I think there is an element of the fact that the people at the top of the banking sector have got there by being very good at managing the status quo and doing that extremely well. And I think what changes the entire system here is that climate change is not the status quo. It does require a fundamental change. So arguably here, the people who are tasked with leading the change are perhaps not the right people to be leading the change.
No.
Because
You're absolutely right.
with that, there is another problem in terms of just skills and awareness. And I mean, within the banking sector, there are a lot of people who are very good at financing fossil fuels or heavy emitting industry. There aren't very many people who understand renewable technologies or nascent, growing, new kind of low carbon industries or anything like that. So there is a real kind of, even if they wanted to, and I say they, I mean the big banks who are struggling to grapple with all of this. There's a training awareness pivot
That's
that needs to
interesting.
happen. It has a lot of natural inertia to it, which is about education and skills and awareness. And the other thing that's happening here, just while I'm on this kind of side of things, is banks are getting better at delivering the top level narrative. But distilling that, if you are a big bank of tens of thousands of employees, so that not that each individual employee understands what the bank's position is on this, because that's a matter of leadership to be able to say, here's why it matters to us and what we are trying to achieve as a bank, and to make your employees feel that they have a license to do that. That's a leadership thing. But also where it often falls down is, well, okay, that's great. We've got these net zero targets. We've got this ambition as a bank. But I work in credit analytics or frontline sales or operations within this particular division of bank. What does that mean to me and my particular role? And that is where there's a real gap in terms of distilling and translating that so that the teams and individuals on the ground can really get to grips with making change in bigger banks. It doesn't work its way down. And that is a problem. And particularly amongst bigger banking organizations, it is a structural inertia to being able to make the change that's required.
I think very interesting reflection from you. I think especially this, that you don't have enough knowledge about the green investments. So people don't understand the risk, people don't understand the market. So it's easier to just, keep lending to those old oil companies you know since many years ago. But the problem is that the future will look very different because we are now transitioning away from the fossil fuel society. It's just a matter of how fast it's happening, not if it's going to happen. And the finance industry, is so schizophrenic. In one way, there's no industry out there that is better educated about evaluating risk. But there's no industry out there that is so stupid so they only do what everyone else are doing. We all know what happened in 2008 in the financial in the financial crisis, where everyone just didn't see the risk that was quite obvious, and suddenly everyone saw it, and it ended up very badly. So we don't want to end up in a new financial oil crisis, stranded asset, and all that. We need to, transition away much sooner. So how can banks like yours not only do the great thing you're doing, can you also kind of challenge and help your competitors, because you're not able to compete with all the banks on this planet? You're not even operational in more than 2 countries. Do you do any kind of work in this direction, kind of try to team up with other banks and nudge those banks that are not thinking like you?
Yeah, so I think that's where the role of some of the sort of net zero alliances come into place, because so we're members of Bankers for Net Zero in the UK, and that is tied to the UN Race to Zero campaign and that side of things, and brings together the UK banking market specifically to try and influence policy, to address particular areas where it's a challenge for us to kind of make a difference, and we need to find the best way of doing that. And that's got really good convening power. We're also members in the UK of Tech Zero, because we are a fintech as well as being a bank, to try and leverage technology and that side of the industry in terms of the solutions that's providing and bring it together. So I think collaboration is really, really important, and I actually think it's something that the banking industry isn't very good at historically. We're quite protectionist. Nobody likes to, and it's also there's a confidence thing in terms of how we talk about this. Everybody gets used to in corporate reporting talking about what we've done.
Yeah.
But in respect of things like climate, no matter how ambitious you are on this, you are probably this far through this bigger journey that you need to go on. And we need to be talking about what we haven't done yet, or where the limitations are, where the challenges are, and only by being open and transparent about that do we collectively then find solutions to it. And we shouldn't forget that it's not just a problem being presented here. That is where the prize is, to be able to identify the scale of the journey. And I think that's part of the problem is the backward-looking narrative here of here's what we've done, here's what we've achieved to date, we're chipping away at this. Well, let's just look at the journey we need to go on. Let's look at what we haven't done yet. And that is both an opportunity and a challenge. But, that's what we as ambitious kind of finance leaders ought to be going after. And I think as well, one almost question that I would pose here is to that risk point. If a lot of the arguments, certainly around the sort of bigger players here, is that if I stopped financing fossil fuels, my competitors would just come in and take all that business.
Exactly.
But I think the question is, if anybody, and I find this highly unlikely, but I'll pose it anyway, if any of the big banks said, you know what, we're not financing this anymore, would all of the other banks then turn around and say, hey, hang on a minute, the game's up here. If those guys aren't doing it anymore, clearly this is not the way to go. And then everybody would stop doing it. And I think there is a possibility that that's exactly what would happen, but none of them have the confidence to say, I'm going to be the one who pulls the plug on it, because banks are risk engines and they are commercially driven, and that makes sense. But it's just that irony there that actually I think we are at that inflection point where if there was a big moment where one of the big players decided that this was just not the future, then actually maybe everybody else would follow suit rather than just grab that business.
I agree with you. I think that, in one way, there's always going to be some bad financial players that will lend money to dirty companies. There's even players that lend money to drug dealers somehow. Maybe not banks, but there exist people that are willing to lend money to bad people. But if the big accreditable, the institutions, the big brands, if they move away from the fossil fuel industry, they will take away kind of their legacy to operate. Public opinion will change faster, etc. There is some players now doing that, especially in Nordics. In the Nordic market, we have 4 big banks, and one of them, Handelsbanken, have a much stricter policy on not lending to fossil fuel, etc. That's quite a conservative bank. So we also see in Denmark, it's happening you have some examples in UK and Netherlands. You have a big pension fund move away from fossil fuel, etc. So it's happening, but it's happening a little bit too slow. And what we see at We Don't Have Time, in order to get this ripple effect you're talking about, I don't think it's enough to just get some big players to do the right thing. I think we need to have those doing the right thing. Small players like yours, big players that are moving in the right direction, to actually get more clients. Because if they are growing their market share, they will scare those that are not doing the right thing, because people hate to lose market and hate to lose clients. I think that's why everyone can play a part in this. If you're watching this, everyone have a bank account or a pension fund or something. Look at your bank, look at your pension provider. If they are still not moving the money in the right direction, ask them those questions. By asking questions, you're actually influencing them. But if you don't like what you hear, move to a bank that are doing the right thing, not just not investing, but also supporting the solutions, like OakNorth, if you're an entrepreneur. So I think that's one important thing. I have one question for you regarding, you said that you're doing a lot of financial reporting, etc. And there's a new standard coming up where you also, you measure, companies are supposed to measure the direct emission, scope 1 and 2, and indirect emission, scope 3. But there's actually another kind of emission, and that's from the company's bank account. If a company have a big cash position in a bank or have a big loan, etc., they are actually supporting, they have emission because the bank are lending money to those creating emissions. And if you look at many companies, the financial emission can be as high as all other emissions. So lowering your company's carbon footprint, the most efficient way can often be to start with looking at your financial emissions. And we have a partner for this Move the Money campaign that we work closely with, that is named Exponential Roadmap Initiative. They have released a guide that help companies to measure this financial emission and also advise them on how to create a policy to lower it. Have you heard of this Green Cash guide? Because I think that can really support your business to get more companies move to your bank.
Yes, I have heard of it, but then I live and breathe this space because it's what I do. And I think the point being is that there is a lot of awareness that needs to be brought to the wider market around that level of influence. And certainly, you know, smaller businesses and growing businesses, the chances are actually a lot of the time their financing has a much greater impact than their actual individual business activity. But they don't know that because it's not a natural place for you to look. I think it comes down to individuals as well. Like there's the classic kind of wherever your pension fund sits is probably has much greater impact than you as an individual on the environment if you've not thought about where that sits. So, and us at OakNorth, so we got highly ranked recently by Bank Green, who are a business who does that exercise of actually looking at where the banks are in terms of who's financing what and therefore where you should put your cash. So there are organizations now that are looking at this and trying to showcase the fact that where the money is has a huge impact on wider environmental matters and actually that companies and individuals need to be thinking about actually where they bank. In that respect.
And it's not just about move away from the problem. It's very much also supporting the solution. And that's why I think what you do, supporting entrepreneurs that are creating the solutions, that are working on the solutions and understand their risk and their challenge and their opportunities, giving them, funneling money to them, that's extremely important. We need, just in clean energy transition, we need $4.5 trillion investment yearly. And I think we are not even at 1 trillion. So it's a huge gap there. So we need to move the money, and I very much thank you for what you do, and I hope that you can scale. So my second last question, I have two more questions. Second last question, how can you scale as much as possible? What do you need to become not just a small niche bank, but a big bank in UK and United States? If you dream, what do you need in order to really scale?
Yeah, I mean, so obviously, I hope that we continue to grow, and we've grown actually at a really good pace over the last 8 or 9 years, and it's clear that there is a really big addressable market for us to support doing what we do. And I think with stepping into the US now, there's obviously a big market there for us to go after. So from where we are at the moment, I think, there's loads that we can do, and that's great. I think to the wider point here, we're a big cog in the machine in the finance industry, but we are a cog in the machine. And in terms of doing more in this space, we need policy setters, we need industry, we need regulators, all to come together. To that collaboration point, there are numerous instances where I come up talking to our own customers around obstacles doing more in this space that is planning or policy or lack of certainty in terms of the political landscape. So actually pick a direction and stick to it. That's what business needs. And if they've got that confidence, then they'll invest. And if they'll invest, then they need money to do so. And that's where we come in. So there's a whole ecosystem that needs to pull together and move in the right direction. I'm not the first person, I won't be the last person to say that policy certainty is really important. I think policy that actually supports the agenda is critical. I think collaboration is really important. And I think we're starting to get those. Banks can't be experts in everything. We are to that point earlier around difficulty around skills and data. Actually, there's a whole load of up and coming sort of technology or service providers who can now do that. And I think banks need to be willing to collaborate with third parties wherever they need them to accelerate this. And that's not just for us, that's for our customers who are trying to do more. So I think there is a big collaborative effort that needs to happen to move the agenda at scale beyond where we are now.
You're not alone answering in that way. So we have much more work to do to push for that to happen together. My last question: are you hopeful? Do you think we are really going to, solve the climate crisis and get the temperature curve down? What's your not your corporate Matt, but the personal Matt? Are you optimistic, if you're really honest, or how do you see it?
I think if I think about our sort of IPCC climate scenarios, I think we're no longer in an orderly transition world. I think we are definitely into disorderly transition, and that might mean that things take a little bit longer, and it takes a while for everyone to get their ducks in a row, and there might be the odd cliff edge in terms of things changing in a slightly more disruptive fashion. Do I think the economy will decarbonize? Yes. Do I think the world will look like quite a different place by the time we've actually got around to it, because we haven't really got to grips with it as well as we should have? Yes. So I think that's a bit of a hybrid position. Do I think that we'll achieve net zero and the world will transition to net zero? Yeah. Do I think that will be an easy journey? Do I think that there will be opportunities missed? Do I think that actually there'll be a lot of damage along the way because we've not really done it as quickly or urgently as we ought to? Yeah. So I think I don't want to just answer your question and say, yes, I think we'll get there. I do think we'll get there, but I think it won't be a clean journey. And I think we'll have created quite a number of problems for ourselves in the route of getting there.
Yes, I agree with you. And we had this last week, or this week, actually. We had a UN meeting in Bonn. That's a pre-meeting for the next COP meeting, setting the agenda. And Simon Steele, that our head of the UNFCCC, he laid it out in the beginning that we need to acknowledge that we are actually making a lot of progress, but we need to speed up and make more progress. But I think one thing I would like to share, to also, echo what you said, is that 10 years ago, the expected, the prognosis temperature warming end of century were at 5 degrees. And that's a scenario that basically means end of human civilization and maybe even extinction in our children's lifetime living now. I mean, that's insane if you think of it. We're not that anymore. We're actually at 2.7 degrees. That's the prognosis end of century right now. And of course, we can, if we have in 10 years' time lower it from 5 to 2.7, of course we can lower it to 1.7. But it will probably mean that we have a rough ride before we can arrive at that end goal. But I absolutely believe in you. And in order to do it, and this was also very much discussed in this UN meeting, we will not succeed with it if we don't move the money. But we will succeed with it if we get the money flow in the right direction. So I want to thank you so much for what you're doing. And I wish you a lot of good luck and success with your new entering the US market.
Thanks, Ingvar. Great discussion.
And if our viewers want to read more about your bank, we have it here in the text below. So thank you so much.
Thanks.